Good morning. It's April 3rd, and there's a lot going on the market today. As you can imagine, we had a big ramp up in the market last week, and today we're seeing tech suffer. So what do we do about it? Are there other signals that you should care about? Let's dive into the Longbow dashboard. So first, we're going to start with the SPY. You can see here it's still near overbought territory. But if you go into layers there, remember we talked about consumer discretionary being overbought. It's still really close to that level even now. The SPY is, call it flat. It's about 9:40 West Coast time. And we're getting the Longbow core signal of short. So I'm not going to give you the proprietary nature of it, but it's saying there's a lot of things that are lining up in a row that you'd be careful. This is not the day to be buying into discretionary. This is the day you might be trimming or protecting. It doesn't have a very strong signal strength though. So that means that some of the factors are pointing to a short, but not all of them. So you don't have to go out and short the sector, but if you have longs in there, like many of us do, betting on the strong consumer, this is the time you might want to protect it. That's what the data is telling you. Healthcare, it's overbought. So you're probably reading from lots of analysts saying, hey, healthcare is one of the few places that are great to invest in for 2023. This isn't the day you go do it. You're getting an overbought on the trading range, so be careful about that. It's still got neutral short-term, bearish medium-term, so it has a setup if the neutral came to be bullish or if bearish turned to neutral. But right now, people have overbought it. They're concerned about, you probably heard the news about OPEC reducing the supply of oil. That's causing people's concerns about inflation. People are running to safety, hence you're getting an XLV pop. Same thing with energy. That's back on the OPEC news. The white line's a little above the red line. Now you're looking at almost a 10-to-1 downside. So again, this isn't the day you say, hey, I really want to be adding energy. Should have been doing that in the last few weeks when energy was taking it on the chin. Not the time to be putting in your energy positions. And if you're trading it, call it day to day, then you've got that overbought signal. So be careful with that. Tech. We're here in the middle of the range. So we talked about this last week and gave some ranges on some individual tech positions. It's bullish short-term, bullish medium-term, but guess what happens if inflation stays high and sticky, especially if energy remains high? It means that rates will remain sticky and high, and it means that tech, which is more long-duration trading these days, could suffer. So nothing to do today, but keep an eye out on that signal. Vol is still pretty low. We're here, at 19 and change. Anything below 20, it's less risky. But if you think that could move during earnings season, once everybody's back from spring break or their holidays, this is the time that you'd be thinking about how to play vol. So, whether it's protecting positions with options or otherwise. And then, we got a long signal. Interestingly, remember that short high yield ETF? So it's really close to the low end of its trading range. It was below that last week that we talked about. But here, again, this is about a 7 out of a 10 in terms of strength. So it's reasonably strong. It's not a 10 out of a 10. But this, if you're thinking about, hedging your portfolio, taking an opposite non-consensus view, then what it would mean is that you would be thinking about how do you protect against riskier assets such as high yield. So it could be this way in the fixed income market or putting protection on other positions that you have because this is kind of a bellwether and if people are taking on risk. That's it for today. Hopefully that made sense to you. If you have any questions, please reach out.